You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we're back. Yes, it is time to kick off our broadcast week here on the old OIRN. What better way to do that, of course, than with episode 1 of the bi-weekly options extravaganza known as the Option Block, what the cool kids call the old OB. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the aforementioned network. Welcome to all of you out there. If you're listening live, welcome to all of our pro members out there. We love you all, grown by leaps and bounds all the time. So excited to see so many of you are really enjoying and getting a lot of enjoyment and value out of what we're doing on the pro side. And that, again, this is just the beginning. We're kind of just getting started. We have a lot of cool plans and ideas and initiatives in store for that. So check it out if you haven't already. theoptionsinsider.com/pro or /plus will break those down for you. If you want them both side by side /shop, we'll do that for you too. Tell you exactly what's going on over there. If it intrigues you, click that button. Join us tomorrow. We got a really good pro Q&A coming up tomorrow. You want to learn how large funds and asset managers are really allocating and using options right now? Let's go to the people who are handling the execution for them. Yeah, we're going to talk to John Cherry, who runs all the options over there at Northern Trust. Northern Trust really kind of changing the game in options. For a long time, Northern Trust was non-player completely when it came to options. When they first reached out to us a few years ago, said, hey, we're starting up in options. I said to you, are you sure you have the right place? We're not talking T-bills here. We're talking options. And they have transformed themselves. And as a result, kind of transformed what's going on in the world of options. A lot of big players who weren't using options before now are doing so because Northern Trust is doing it. So you get to hear about a lot of cool stuff that's going on. Also, what a lot of large and high net worth individuals, what are they doing with options right now? And trust me, there's some size net worth individuals over there at Northern Trust. Well, we're going to find all that out tomorrow so the pro members can get those questions in now for John. You can also listen live, ask those questions tomorrow. If you can't make it live, of course, you can always hit us up and listen after the fact via the old private podcast feed. So if you're a pro member out there, get those cues in now. This is going to be a good one. We've been oversubscribed pretty much every week with questions. So get them in while the getting is good. This is going to be a fun one. We promised you pro Q&As, and this definitely falls into that category. All right, and let's see. Well, before we get to, let's see who's joining us on the show today. It's Monday, so we got to kick things off the way we are wont to do. It's time to go back. It's time to set that dial back to the halcyon days of the 80s, where all the hair was big, the laces were glowing and big, the pants were baggy and weird, and TV shows were the best they've ever been, and also wrestling was the best it's ever been. So let's get to that now. It's time to guess that 80s wrestlers' entrance music. All right. I'm looking at him right now, so I could see how iconic as he is. This is definitely in the pantheon, the stable of iconic 80s wrestlers. His music, perhaps not quite so much so. Maybe a little bit harder. Maybe a Wrestling 201 from the 80s. So a little bit more challenging. He got it right last week through the miracles of them actually saying the name of the wrestler there. So let's see if he can go 2 for 2. We are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, a harder one. This is actually no. Last week 2 weeks ago, I believe you got it correct. Last week, I believe you guessed two other 80s wrestlers. You probably guessed them again this week. But Mr. Rock Lobster, Andrew GIOVINAZZI from OptionPit.com. A, welcome back to the program. And B, do you have any inkling of who that wrestler might be, sir?
I have no inkling at all who that wrestler will be, so I'm just going to guess the Macho Man. The Macho Man.
I like it. Whoa, what is going on there? For some reason, I started to play Dusty Rhodes, who it is not. I'll give you a tip. That's not Dusty Rhodes. For some reason, my machine started playing him. No, it is not also the Macho Man. A good guess, though. He's an iconic 80s wrestler, but it was not him. Mr. Uncle Mike now. We go on out to the land of St. Charles, where we are joined once again by Uncle Mike TOSAW, our reigning, defending 80s wrestler champion, the guy who requested that we kick off the week with this game. So this is very much in his wheelhouse. Mr. Uncle Mike, A, welcome back to the program, and B, can you name that 80s wrestler, sir?
All right. So first off, thank you. It's always a pleasure to be on the option block every Monday. This one's tough for me, so I got to take a flyer with this one. I don't know it, so I'm going to guess the African Dream Hakeem.
Interesting. A Chicagoan you may not have known. So a Chicagoan, but no, not the African Dream Hakeem. Tell you what. I knew this was a little bit harder one, so I queued up a secondary clue for both of you. This is a clip from a uber popular 80s TV show that this person was also in character. In fact, he was an iconic member of this show. So here we go.
Eddie's disease! I've been expecting you. My name is Sergeant Slaughter, special drill instructor for G.I. Joe.
That's terrific, Sarge, but I'm trying to cut down on the chicken sweat just now, so if you'll excuse me.
You're going nowhere, Space Case. You're here because you're the industrial straight follow-up. My job is to whip you into shape, and I'm talking whip. There's only 2 ways out of my command. On your feet like a man, or in a ditty bag. An itty-bitty ditty bag. Got it?
Yes, sir.
All right. I think that should clarify it for anyone who was on the cusp there. Uncle Mike, I'll go back out to you this time. Can you possibly guess who that was, sir?
I can. So Sergeant Slaughter, but didn't Sergeant Slaughter used to come out to the Marine Corps fight song? Did he must have changed to this one later, because I know in the early 80s he was a Marine Corps fight song guy.
This is kind of his iconic tune that goes back a ways. In fact, if you go look at right now, we pull all of these from the iconic source, which is the WWE official entrance music archives. That is what they have for him. I mean, I know he changed gimmicks. He got an evil in the 90s with like the Gulf War and stuff. Yeah. But I don't think this is that music. I'm pretty sure this was his music from back in the day.
Okay. Oh, I agree. Hey, if I was a true wrestler, I should have known that. So,
and either way, we all win because we still got a chance to play a great clip of Sergeant Slaughter and Don Johnson from the G.I. Joe movie. So we all win at the end of the day.
I love it.
As we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
It is impressive when you think about how much he almost was more iconic as a G.I. Joe figure. They just took his gimmick wholesale and pulled it right into G.I. Joe because it fit perfectly. That's the only time I can think of a wrestler just kind of becoming something, the same thing in yet another medium and it working. So obviously The Rock is The Rock, but that's a different thing. This is Sergeant Slaughter being Sergeant Slaughter in a kid's cartoon, and the character just fit perfectly, and he became an iconic part. I knew him kind of more from that even for a while there than from wrestling, because that's what he was doing for a long time. But I digress. We could talk Sergeant Slaughter for hours. Let's see if these markets are getting slaughtered out there. Are we like lambs to the slaughter today out there in the market? Let's find out with the trading block. Of course, the portion of the show we break down what the heck is lighting up our screens. And no, we are not lambs to the slaughter. It is quite the opposite, actually. No one's getting slaughtered today unless you're a short. out there today because things are green on the screen. S&P once again playing it right down the middle, up about 1.2% to kick off the show. The Dow feeling its oats, up 1.6%, and the NASDAQ, a bit of a laggard, up about 0.7%. And all of this green on the screen means vol's kind of mixed it down mostly across the board out here. Coming into the kickoff of the show, we had, of course, our old friend, Mr. VIX Cash, was at about an 18 and a quarter. Let's see where it's hanging on now. Actually, a little bit right around the 1840 or so. And it puts it up slightly, about a quarter of a point from last show. But of course, we were delving even higher in the midst of the sell-off on Friday. So a lot of that vol getting squeezed back out of there. Again, that was the big question. After Friday's sell-off, were we going to follow this down on Monday? Was vol going to continue to spike? Or was it, of course, heading south? I joked on Twitter going into the week. I bought some put flies in VXX. So clearly, vol was destined to spike on the open. And yet, surprisingly, that didn't happen. So that was a fun one. VVIX right now at about 122.5. Puts it up about 2.5 points out there. And our old friend VXX at about 32.5, a little bit shy of that right now. Puts it up slightly, about a quarter. So pretty much all those products that had just spiked aggressively. Let's see, how high did we get in products like VXX? VXX got to 34, almost 34.70 out there. So quite a run out there for VXX. VIX itself got to north of the 20 handle, listeners, 20.66. So you might be surprised that we're up today, but then again, compared to how high we were on Friday, all of that has come back off and then some. So a lot of vol erosion out there. Vol Q coming into showtimes at about a 17.5, puts it up about half a handle out there as well. So a lot to unpack. Uncle Mike, you kind of got it half right. So I'll let you start. What was lighting up your tape out there? What is lighting up your tape out there in a very much Uncle Mike type of day, sir?
Very much so. So we have the St. Louis Fed guy that comes on TV last week talking about how we might raise interest rates a little bit sooner than we had originally expected, and the market seems to not have liked that so much.
By the way, can I just say I hate that? The Fed should speak with one voice, right? They had their meeting. They had their minutes. Put that out there. You don't need these governors running around gumming up the works. That happens all the time. Drives me crazy. Fed, speak with one voice and then shut the hell up.
I couldn't possibly agree more with you on that one, Mark. It's whether it's good news or bad news for the marketplace, it's definitely something to where it can be very frustrating. And then I just remember where like the market would move. When I remember one time, probably about maybe 10, 15 years ago, when Maria Bartiromo was doing an interview, and she was just talking about how the Fed chief at the time, it wasn't Greenspan, it was Bernanke, I believe. And he said, we didn't mean to send this message. And then the market moved, and then they said, we sent that message. And it gets to the point to where, yes, I understand the Fed is very powerful with interest rates, but it can be very frustrating, and it's been very frustrating for a long, long time. So we could go on for many hours on how frustrating that could be, but with where we are right now, apparently it doesn't matter now that we're going to raise rates sooner than we originally thought. And I really thought that on Friday, I thought the continuation of the sell-off into the close, if you look at the one-day chart of the movement of the markets going into the close on Friday, we really sold off like the last couple of minutes. And I remember looking at that. I think there was just a lot of fear from no one wanted to be long going into the weekend, apparently. And so if I wasn't already long, I would have considered getting longer, but I was already long going into that. So I took my pain and hedged my short premium going into the weekend, and we were okay with everything. And of course, we're up again today. We did have a little bit of a sell-off last night. S&P was down, I believe, close to 30 points last night in the futures trading. So it looked like it wasn't going to be a pretty open today. But then upon waking up, we were up probably about 10 points about maybe an hour and a half before the open. So we had a lot of movement in the marketplace last night. But then ever since the markets opened, it's just been the bulls have definitely been in control. In looking at the sectors, the one that's really catching my eye the most right now is financials. That's up, looking at XLF, that's up nearly 2% on the day. And so I really think it's a lot of just quite frankly, a recovery from where we were. I don't think there was any major things to say, now it's good. But I just kind of think that things are overdone a little bit on Friday in the financial arena. Of course, XLE is up quite a bit as well. The energy sector, XLE is up over 3% on the day. So we have a lot of movement with that. And of course, that's, I imagine, par for the course, or not, I imagine it is par for the course, the fact that oil's up over $1.80 on the day as well. So we have that. In looking at my beloved gold and silver, not a ton of movement in that world. Just in looking at silver, we're up 7 pennies on the day. Gold is up $14 on the day. So we do have some movement to the upside, but not a ton. Bonds have sold off a little bit on the day, but still not a lot. We still, in the IEF world, we're still around that 115 level. We rallied a bunch going into the close on Friday, and then we sold off a little bit today. And I'm referring to the underlying itself, not the yield, of course. So we do have that going on. So we're not having a day like we had a couple of these last week where both stocks go up and bonds go up. I talked about it a little bit last week on the show. We're not having that. This is kind of a day to where things look somewhat normal, and that stocks are up, VIX is down. Bonds are down, and stocks are up. And commodities, they kind of do their own thing a lot of times. So with that, I think this is just kind of a recovery from a lot of the craziness that happened last week, in that we have the Fed, the Fed saying what they said. We have the crazy sell-off going into the very close of trading on Friday, and that's what we have. So that is my take as to what I am seeing in the marketplace today.
There you go, sir. Now let's head on out to the dark and stormy shores of Maine, where the rock lobster is hidden deep in his abode, and where he knows two wrestlers, Hulk Hogan and the Macho Man. So someday, one of those has already come into play. Someday, perhaps, the other shall as well. Mr. Rock Lobster, welcome back to the show. And what is lighting up your tape out there in a mostly Uncle Mike type of day, not a Rock Lobster type of day?
Definitely an Uncle Mike type of day. I just want, for the record, I would have guessed Sergeant Slaughter on the when you actually played the TV show, the G.I. Joe show. I'm just saying, I had that one. I had it. I felt I had it. I even figured out it was Don Johnson's voice, which was surprising me. Anyway.
So when you heard that one, well, he said his name was Sergeant Slaughter, but that triggered some memories in you?
I do remember that as a wrestler. Like, I couldn't tell you what a wrestler's name is, but if you popped out some names, I would be like, that sounds like a wrestler's name. Or, I don't know where the names come from in my head. But, well, we didn't get 15 VIX on Friday. I was famously wrong on that for sure. The only actually good, as far as dumping some vol puts and stuff like that was Wednesday. Actually, prior, when volatility sold off pretty hard prior to the Fed. I got down like 16. VXX was like 30 something, 30, 25, pretty low. So, but then we had the jawboning, like, okay, we got to talk tough. We got to talk tough. We got to talk tough, which, like, as you said, surprising. And if you had to guess, what's 10-day volatility in SPX? Realize vol. Take a wild guess.
I always go first. TOSAW never guesses on these things. TOSAW, you have to guess first this time. He always pretends he's muted.
Yes, I know. Well, I'll make life easy on you. The 10-day vol is less than 8%, and so is the 20-day vol.
I was going to guess about 9%, so I wasn't too far off.
30-day vol.
TOSAW didn't even guess.
20.
I'm going to make him guess next time.
I was muted. Yeah, you have me muted.
There
I
you
couldn't
go.
have guessed.
60-day volatility is 11.5. So we still have what I would call the odd VIX or the odd COVID. We're still not out of it because you have this where VIX is there just aren't those back month sellers. And when I say back month, I mean 30-day, 30, 60-day sellers aren't there yet. Not in any big way. And what the weeklies actually, what's funny, the most funny or interesting thing about the weeklies is the weekly vol can get to like 10%, 9%. And that is keeping kind of a harder line or mirroring SPX volatility and the 30-day vol. So I think, if anything, I wonder if Dr. VIX has a study on that. But I think I wouldn't say they're historic, but they're pretty high swings between like 30-day and 9-day or 30-day and 5-day balls, some of the lower short-term balls for the weeklies. It wouldn't surprise me if we were hitting numbers like that. But like, who knows? So the only thing I could divine, and maybe TOSAW could correct me, is like the Fed has basically said, hey, we're still here and we can raise rates and all that other kind of jazz, and we care about inflation, and it would be nice if they just decided to go all in and say, hey, I think the biggest difference is I feel we do have floating rates that are somewhat, because the bond market is kind of, they drove rates up pretty fast from January to mid-February, and I think the bond market can do it again. So as far as stocks go, I look at this and like, what's the catalyst to get us to higher prices? And I don't really have an answer for it. So we could be here. I mean, actually, to be honest, with the SPX, I would take a 6% gain from here for the end of the year and be happy. Like, I think that would be a good result. Because there's still just way too many cross currents, and I think that's keeping equity prices where they are. Also, this uncertainty, it's still uncertainty about rates and all these commodity price spikes and all this other stuff. So, just regular old market stuff, less about COVID. Although I will say in Maine, like even in our town, businesses aren't open because they can't find people to work, which I've never seen before since I moved to this state. And if it's happening here, it has to be happening in other places. Like literally, like Dollar General is not open a couple days a week. A lot of restaurants that have been open for years, even survived the COVID, they can't open on certain days because they don't have enough employees. So I think these people kind of living on the dole, which is a new thing in the U.S., I think, is not healthy. And even when there's employment out there. So there's these things are contributing to, I think, kind of keeping a lid on the SPX. So like I said, I think 6% feels like it would be a good return, a great return for the end of this year. But I could, like any other prediction, could be totally wrong. And as far as VIX goes, we still have not recovered. We've only recovered part of the move. So I'm not quite sure. So on Wednesday, we were trading at a 1649. We're still 2 points above that. So we'll see what happens. We are at the vol lows of the day. And I, to be honest, I think the market accepts the fact that the Fed is going to have to raise rates because it's going to have to. So it's just how you survive kind of the algo moves and all the other stuff that just smashes the market up. But again, I look at this and we have not totally recovered the vol move, but implied volatility in the vol products, they smashed it incredibly hard from Friday's close. So there's not that appetite for that upside vol right now. And I think that's the biggest tell, right? If they don't want it, they don't want it. They take the vol down really hard. You have to ask yourself, hey, is this an opportunity? Maybe to scoop some, to be honest. I'm glad I got rid of the calls that I closed on Friday. And it's still a long cycle, but anyway, that's what it's a pullback. The market's pulling back, vol's coming in, so things are acting kind of normally, and we'll just see. But it wouldn't surprise me if vol is back to 16 again. It's that same handle that we get to every single time over the last year. We get to the 16 handle and it bounces like a rubber biscuit. So once again, what is it, for the 10th time? I think I should post that. Volman should post that that graphic. Okay, 16 handle, bounce like a rubber biscuit every single time. So that's where we find ourselves today.
It looks like I unfairly maligned you earlier, Mr. Rock Lobster, when I said you only know 2 wrestlers, because our chat is coming to your defense. Mr. Unlimited says he actually knows 3. He knows Ric Flair as well. So there you go. I forgot you do know Ric Flair, so you get credit. You get credit.
Whoever that was.
You get credit for a third there. Our chat looking out on your behalf, sir. They don't let me besmirch you. Most of the time, not all the time, when it's an unfair besmirching. All right, let's see if the markets are being besmirched out there from an overall volume perspective. And at least in the indexes, it kind of depends where you're looking. VIX, not so much. Kind of shrugging its shoulders today. Only 171,000 contracts on the tape. The ADV down to about 521 out there right now. If you get out to the broad indices like SPY, then you're talking a little bit more paper. Almost 3 million contracts, about 2.9 million contracts on the tape. That's almost at its ADV already. Its ADV is only 3.75 million right now. The ADV has come down quite a bit. It was well north of 4 not too long ago. So it seems like SPY heading in the other direction to VIX, at least from a volume perspective. The S, similar story. I can't remember the last time we saw the S over 1 million by this time during the day. It's at 1.1 million right now. Usually that's pretty much a day's worth of volume, and it's already done that. The ADV is also up pretty strong. It's up to about 1.25 million right now. Looks like it's going to surpass that. So a robust day in the broad S&P and in S&P family, SPY or SPX, whatever you're trading out there, is putting up some numbers. The Q's doing decent paper as well. Not quite as robust as the S, 732,000 contracts. In the Qs, the ADV, 1.19 million. By the way, the Qs have a lower ADV right now than the S, which is crazy, especially when you consider how freaking enormous the contract is in the S. And the small caps, at least the IWM flavor, at about 363,000 contracts. The ADV about 564. So a decent day out there, but nothing blowing the doors off. Let's see if we're blowing the doors off from a single name perspective. This is kind of where the action has been of late out here. It costs you 202,000 contracts to break into the top 10 right now. That gets you to the Amazonians. Just holding on to the top 10, just barely over 200K. Number 9, Palantir's kind of been just resigned to the bottom part of the top 10, just barely clinging in of late. 206,000 contracts for Palantir. It can still make it. It's still there, number 9, but it's not quite blowing the doors off. Number 8, we got NEO, still holding out there, 216,000. Number 7, it's Ford, 222,000 out there for Ford. Number 6, NVIDIA. All the graphics and chips brouhaha that's going on out there, driving NVIDIA to number 6, 232,000. And also number 5 as well, AMD, also feeling that love out there to the tune of 306,000 contracts on the tape. Number 4, I said, it's Tesla. This one good today for, how many we got? 536,000 contracts. Then you heard us talk about it on Options Oddities last Friday with Saad and the folks from Shift Search out there. It is Wish, a.k.a. Context Logic, back in our top 10. Good for number 3 today, 661,000 contracts. Does seem like this is the hottest, newest addition to the meme crowd. Up 2 points just today to the 13 and about a half, nearly 20% just today. So a nice pop for Wish, and also some nice action on the volume side. 661,000. Are there some juicy verticals, some juicy flies for free out there? I don't know. We'll have to find out after the show. I'm busy talking to you folks. I don't have time to mine that stuff right now. These are the profits I leave on the table to talk to you folks. What we got here? Number 2, AMC, 737,000. So Tesla getting relegated a few stops down now here. 737,000 for number 2. It is AMC. Number 1, Apple, managing to hold the top spot, even though it's not their most active day, just barely over 800,000 contracts, 803 to be precise for number 1. Let's look really quickly. Where is our most biased paper lurking today? That would be in Wish. No surprise there. 89% of that paper coming on the call side of the ledger. So a lot of action on the call front out there in Wish. Not a ton of action on the earnings front right now. This week, we have KB Home on Wednesday. Thursday, we got Darden Restaurants, Carnival, good old RAD, a.k.a. Rite Aid, as well as FedEx and Nike, all that on Thursday. Friday, we got CarMax. Let's look really quickly. We do have some reports. I mentioned these before for Darden Restaurants. They are, let's see, these we talked about these on the last show. These haven't really been changed or updated since. So we'll keep an eye on those, Rite Aid and Darden Restaurants. But we're coming up again, so we got to unleash the Eye of Sauron. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let's unleash the Eye of Sauron. Mr. Rock Lobster, we're going back to an old favorite first. Our Eye of Sauron has fixed its gaze once again on Stone Cold. Ticker symbol STNE. Of course, it's actually Stone Co., but it sounds much cooler if you say Stone Cold. Also, it's in keeping with our wrestling theme. Not quite 80s, more 90s into 2000s, but still. I'll allow it just for today. So Stone Cold is back. Remember in the past, we've talked all kinds of size crazy trades out there in Stone Cold. Well, they're back, and they're back again for size. I'll give you a quick rundown. Ticker symbol STNE. Trading right now right about $69, a tick under it. Up a nice little clip on the year, 73% on the year, nearly 30 points on the year. Up about 70 cents or about 1% today. So a good run. A year ago, it was trading 41.5. This one actually topped out in February 17th at $94. So it has actually given up its high quite a bit. And now it is kind of trying to recapture that. It's rallied in the last week from about 63 up to where it is right now, 69. So a good week here for Stone Cold, trying to get back to those lofty days of February. What do we find out here, Mr. Rock Lobster? One of your favorites as well, which is the old line in the sand put. Done, dare I say it, for some size, sir. We got someone coming out here deciding that 60 strike, that 60 put in July is the place where he's drawing his line in the sand this far and no farther, he says. And he's coming out blasting away on that strike. First kicking it off 12,516 times for 39.7 cents. So just a tick under 40 cents out there. If you're wondering, that's about a 40 vol. He did it when the stock was actually much lower. Stock was 67.60. So he got him off. Not a bad timing on that one. And then let's see, about 40 cents on those bad boys. And then he decided, you know what? He needed some more. So he came back 11 minutes later, said, how are they now? I'll take, actually, I don't forget that bid. They were 40-cent bid when he came back. I'm going to hit some more of these things, 8,344 more. I'm going to crush that bid down to 35 cents. These were late, though. So that probably was the bid when he put them up. But either way, they were through the bid when time they got printed. So that was, it's about the same vol, about a 40 vol as well out there. And that was, stock was a little bit higher. He got those at that same price when the stock was 68.30. So impressive execution on that front. He got a couple of them. I'm guessing, I haven't pulled them up right now, but I'm guessing they're no longer trading for around 40 cents, partly because some guy blasted away at 20,000 of these things. So Mr. Rock Lobster, it's an interesting line in the sand. It's not exactly without risk. This thing was trading 57 not that long ago, a little over a month ago, May 12th. It was trading 57. So that line in the sand could be crossed. And of course, a year ago, it was trading 36 and change. So 60 handle, not exactly risk-free out here, but someone putting some size, about 20,000 contracts down, saying 60 handle by July expiration, this far and no farther. What say you, sir, Mr. Rock Lobster? Your favorite strategy and one of our favorite names, sir, Stone Cold.
I was about to say, that's another guy. I think, what is it? Stone Cold Steve Austin, I think.
There you go. You know four. You know four wrestlers now. You're getting there.
Four. I'm up to. I find that very funny. Again, line in the sand. This is exactly the kind of action that's not really happening in the SPY or the SPX. I think you don't have the line in the sand guy in the big indexes looking for the. I'll take delivery. I'll take 20,000 shares of SPY down there or something. But again, line in the sand, kind of hitting it, and and there's still 35 bid afterward. I think these are close to the fire relative. Kind of low vol, but usually they work. This is a good one to keep an eye on, though, because it's a new name title for me besides the wrestling connection. But 21,000 of these have traded on the day. That's pretty. That's not nothing. It's 2 million. It's 2 million shares of stock that somebody is okay with. So, kind of a big number there, don't you think? That close? Usually we don't see them that close.
Stone Cold, for whatever reason, they go big in this name. They don't come out with 2,000 lots. It's got to be 20,000, 60,000. It's a size player for whatever reason. Someone plays for size. Maybe it is Stone Cold Steve Austin. Maybe he found his name and he's just going to town out here writing puts.
It very well could be. I find it, let's just call it an interesting trade. An interesting trade. And I was trying to think of this. Is this the old Stone container? Nope, it is not. Not even close. I don't even know what Stone Co. is. financial technology, blah, 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 blah.
It is the holding company for all things that Stone Cold does. That's what it is.
Well, I guess he's done pretty well. And let's say cloud-based, again, weird, no real idea what this company does. But somebody was not afraid to sell a bunch of stock in it. So, again, line in the sand, and it feels like Vol's just going to go. Vol is lower in there, and I think they single-handedly crushed it. So there you go.
There you go. So those puts are probably looking pretty good right now. Stock's up a couple of bucks. He managed to get another 8,000 off for around the same level with the stock higher. So that was impressive out there. But we'll see how these perform. How does that line of sand sound to you, listeners? You like that 60 line? It's not without risk. But he's getting about a 40 vol and about 40 cents to do it. You think that's a fair trade? We'll find out when we come back to this one. You know we have to come back to Stone Cold, so we'll be back to that one. Meantime, now it is time for us to have a bit of a party. Some might say a meaty party, but we'll get to that in a second. Maybe perhaps if the meatball was here, we'd say meefy. These are both both big and meaty, a.k.a. meefy. Let's beefy and meaty out there. Let's go out here. What are we talking about? Where we're going out to the party land, a.k.a. Party City Holdings, ticker symbol PRTY, a.k.a. Party. Trading right now, let's see, 966, up 74 cents. It's been a hell of a year for Party City. These things came back from the dead. They were trading $1.15 a year ago. Now they're trading $9.68. They're up over $8 or 510% over the course of the past year, which makes some sense. A year ago, last June, not a lot of parties going on, not a lot of helium balloons being purchased out there for kids' parties and all that fun stuff that you go to Party City for. Not a lot of kids' costumes for Halloween. None of the things that they do were viable a year ago. So this one's had quite the run. Good grief. All right, let's go on out now to see what's going on out there today. Today, stock's up 75 cents or about 8.5%. Is this earnings? Is this yet another earnings and meme-related frenzy? Let us find out, because someone's got the old meefy call love going on out here for size. In particular, listeners, it's the 10,000 of the Jan 2022 7/2 going up for a very meefy $3.43. This is freaking rich. That is through the offer. They were offered at $3.40. This guy said, no, I'll take them all at $3.43.5. Thank you very much. The stock was lower when he did it, $9.52. And this has all of the whiffs, the inklings of our old friend. We just talked about this on the last show, the old stock substitution. We were saying, is this maybe an interesting time to be doing that? Well, our friend here clearly thinks it is, even though he is paying a fairly considerable 88 volatility for Party City. So that part may come back to buy him. Remember, as Uncle Mike was saying on the show last week, you want to do these when the vol is a little bit more favorable, perhaps. But at the end of the day, buying the stock at 968 or buying the 7/2 calls for 343, you got a little bit less downside in one versus the other. You also got a little bit more capital efficiency going. So I have a hard time waving my finger at someone saying no when they're doing this, even if they are paying an extraordinary vol. Of course, there are earnings between now and January, the next one coming in August. So this one's all sorts of meefy, Mr. Rock Lobster. It's beefy and meaty at the same time. This is a hefty call. What do you think about this one? You think this is the old school stock substitution, sir?
You know what I found was interesting on this was April, the stock was only like $5.50. So, it has, I think it feels like somebody got the quick double on the stock. And like, okay, I'm gonna take that money and go do something else with it, just ride the calls, which I think that's just a great way to be long. You just take the money and go do something else with it and ride the balance into the sunset. So it does have all the whiff of it. They're taking a little duration. The only thing that makes me question is the open interest, but so much more is trading open interest wise. 9,000 open, they're trading 10,000. It feels like maybe somebody the trader is just actually just taking the second chunk of stock and rolling up. So it does it does feel like that. They're paying about $1 over parity. Not terrible for saving themselves some money. So, it's certainly not a cheap. It's not a cheap option, but if the stock goes to $15, who cares? Ultimately.
Mr. Uncle Mike, you were just talking about the stock substitution on last episode on Thursday. We had a listener question about it. I know you were a little bit more hesitant when the stock's a little bit beefier there and the vol's a little bit higher. What are your thoughts on this bit of stock substitution going on in Party City, sir?
Well, I think that if you're going to do a stock substitution, I guess maybe you can call me a vegan stock substituter in that I really don't like a lot of meat in it. So this would probably be a little bit more meat for my taste if I were to do a stock substitution on this.
The vegan stock substituter. I like it. That sounds like the title of a new book. Vegan organic stock substitution. You get a whole new audience, a whole new demographic coming, Uncle Mike, if you go that way. Is this meaty/beefy? Call love. Is this going to work out, listeners? We'll find out. We'll keep an eye on this one. We'll come back to him a little bit later. Now it is time to find out, Mr. Rock Lobster. We're going back in the Wayback Machine. Not that far, though, all the way to June 10th. Our listeners want to know. We want to know. We profiled a new name, a new style of trading on the show last week. We've done a million line in the sand puts. We know what that's all about. But remember, on the show a few weeks ago, back on June 10th, we discovered a new, a more daring, a more dangerous, a more bold style of put trading, which we christened the death trap puts. They were a little bit more aggressive, and as the name implies, shall we find out if our friend got caught in the death trap or if he escaped alive with most of his juice in his pocket? Let's find out. We're going back to ORCL right now, listeners. We profiled this on the show back on June 10th, and we profiled what seemed like a weird one at the time, 4,704 of the June 85 puts going up, paper blasting away at these for $3.15. These were pretty beefy, not quite meefy, but they're getting there. And what was interesting for a couple of reasons, we just talked about size line in the sand puts in Stone Cold. What were they and every other pretty much line in the sand put? What do they all have in common? They're all out of the money. That's kind of the definition of the line in the sand. You drawing a line which you hope, pray, maybe want the stock to cross, depending on your perspective over there. But this guy went the opposite way. He had already crossed the line in the sand. These puts were in the money because the stock was at $83 when he wrote these. These were already $2 in the money. He sold them for $3.15, hence the term death trap puts. He was already kind of caught in it. These were beefy. These were going against him. And was it going to turn around? Did this guy really want the stock? Well, let's hope he did, because it sounds like, Mr. Rock Lobster, that he got caught in the death trap at the end of the day, because ORCL not looking so bueno after this trade. In fact, it proceeded to continue selling off after this trade went up, and the stock closed at $76.23. So a wee bit below his line in the sand there of 85. So these puts that he sold for $3 and change went out at $8.77. So yeah, he lost about $1.5 million on this one. Now let's hope he wanted the stock, because he got it, and the stock has rebounded a little bit. It's up nearly about 2% today, but $1.5 to almost 78. So he's getting a little bit of that back now if he's still holding on to the stock. But he's still on that trade. All we have to do is look at it through expiration. And as of that trade, sir, it seems like, Mr. Rock Lobster, this guy got caught in the death trap. Would you concur, sir?
I think we named it well. I mean,
what's this we? I don't recall you contributing to that awesome, very illuminating and evocative name, sir.
Do I get just credit for nodding my head behind the microphone?
Yes, you do. For nodding your head in a solely audio environment. That was very helpful.
Yes, I know. Just selling out the money puts is always, you're long. What there else? You're long, and you have a little juice in it. And as we can see right now, looks like they're going to be assigned. So I find that and like I said, the only thing I can think of is what Larry Ellison wants to buy more stock. I figured he would sell calls, be more an aggressive call seller. That's what we got. So I think he but either than that, I think death trap puts is good. You sell it in the money put, and all you do is give yourself a little bit of cushion, and that's what you got there. So I think it makes a good day trade, or if you want to own the stock. But other than that, he pretty much got, they got what they wanted. They got the stock somewhere below 82 bucks, and it's trading, I guess, 77 after earnings, right? Oracle didn't have the best earnings cycle this time. So I think they got what they got. So again, not my favorite type of put, but it has its job. You want to be long, you're long. That's what you got.
There you go. He got caught in the death trap. Well, Uncle Mike, let's find out, because it's Monday. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. Welcome to the strategy block, the portion of the show where Uncle Mike holds court. All sorts of options, shenanigans unfold here. Uncle Mike, this is that time of year. Sometimes you find yourself saying, maybe I want to trade in the weeklies. I want to go a little bit shorter term. Or sometimes you want to do what our friend there did in the odd block. You want to go out a little bit. You want to go out to maybe Jan of next year, or who knows, perhaps beyond. So if I am caught in that quandary, Uncle Mike, if I am there trying to weigh between short term and long term short premium trading, sir, what do you have in store for me today?
Well, I talked about this on the show a couple weeks ago, and I wanted to expand upon it a little bit for the strategy block, just because it's kind of if you're a premium seller, I think you need to be very aware of where you're going with this. So let's say that you can sell premium in one of two ways over the course of a 1-year period, let's say. You can do it in smaller increments, or you can do it in one large increment, meaning a 1-year option that you want to sell. Now, let's just say you're selling a put right now. You want to be a put seller, because I know that's probably the most common type of premium sellers that we have. So the question that I like to ask myself is that, number one, am I looking to sell the premium for a whole year, or is this just something that I want to do for maybe a couple weeks, or do I want to do it for a full year? And let's just say in this instance, we really like selling premium in this stock for a whole year. And we want to get premium every week, every month, or maybe just once a year, whatever works out best for us. We're not looking to just sell premium one time and then never do it again and then move on. We want to stay within the same underlying for the course of a year in this example that I'm giving. So the question is that if you want to make it real easy on yourself, just sell a 1-year put option. Check in a year, see what happens. That's one way with which to do it. However, you might be missing out on an opportunity with that. Let's say that you could get $1 for selling premium on this underlying for a year. However, if you were to sell premium every month, then you could get maybe 10 cents a month. Now, of course, if the underlying stays the exact same, volatility stays the exact same, you're better off selling it month in, month out, because of the fact that you'd get $1.20, 10 cents a month times 12, over the $1 that you got for the year. Now, you can use this example for a month versus 4 weeks, 2 months versus 8 weeks, whatever way you want to do it. I want to keep this in the 10,000-foot view category for right now, so that way we can keep everything simple so you can kind of get an idea of it. So right now, the example with which we're using, we want to collect premium on an underlying over the course of a year, because we believe it's going to stay relatively flat. And our decision is either do I just sell a 1-year put option, or do I sell 12 1-month put options? Now, of course, you can do this, like I said, for 3 months, whatever the case may be, that's fine. But for this example, let's do 12 1-month put options versus 1-year put option. Now, how would I look at this if this is the choice between the two of them? Well, the way I like to look at it is that, is volatility high or low? And by high and low, of course, it means if you think it's high or if you think it's low. If volatility is very high, let's say, meaning I'm concerned that volatility is going to go lower, that would be a case for selling the 1-year put option, because of the fact that in the example that I gave, $1 for a year versus 10 cents a month, netting you $1.20. If you're right every time, then if vol goes down significantly over the next couple months, then you're not getting that volatility month in, month out. You're going to have to settle for a lesser volatility if it goes down. Remember, if you think it's high, that means you think it's going to go lower. So if volatility is higher, then I lean more towards the longer term option to sell. Next thing I like to look at, what's the price comparison between the two of them? Remember, I want to be in this trade for a year. I'm looking to do this for roughly a year. So what I'm looking at is, in the example that I give, if you sell a 1 year put option, then you're going to get $1. Now, whenever you sell an option, that premium is yours now, always and forever, and you get it. It belongs to you. However, the thing that you have to take on, of course, is the obligation to either buy or sell an option. But remember, once you get that premium in your pocket, it is your money. Next, with that, let's say that if I think I can get that 10 cents in premium every month for 12 months, I now know that the difference is 20 cents. So with that being said, is 20 cents enough money to take the risk? Once again, I said it, risk of selling premium every month instead of for 12 months. And it might be worth it to you. It might not be. You're like, you know what? I'm only going to get another 20 cents in a year for doing this, because let's say maybe I think volatility is going to stay the same. Well, I might want to consider going longer term with this and just selling the 1 year option. Once again, you might be saying to yourself, well, I like going 1 month options because I'm done after a month, I'm out. That's fine. But once again, remember what our original example is, or what our original goal is. We want to be in this underlying for a year. That's our time frame. And if you're thinking that, well, I only want to be in it for a month and I want to get out of it, then, well, you're not part of this example. Now, here's an advantage of selling premium month in, month out. By doing it that way over the course of a year, let's say you change your mind. After month 3, you're like, you know what? I really don't like this underlying anymore. And I just don't like it. For whatever reason, it was a technical breakdown, a news announcement, a fundamental breakdown, whatever it was. You're still making money on your puts, but you just don't like it anymore. Well, at that point in time, you've already banked money for 3 months. And if you're doing this long-term option, you might not have that much time decay factored into it. So an advantage for selling shorter term might be the fact that you get more freedom with that to change your mind, if that's what you're looking for. So the point is that if I'm making this decision in time frames of when to sell an option, those are some of the factors with which I look at in trying to make the decision. I don't always believe that, you might as well just sell weeklies. That's the quickest time decay, and you can get more money that way. Might not always be the wisest move to do. Sometimes it is, sometimes it isn't, like anything with trading. What's important is that you understand the advantages and the disadvantages when selecting a time frame to sell premium. I'm not going to be posting a blog on this today, but I will in the future. So stay tuned to my blog for more information. You can do that by following me at Mike TOSAW on Twitter.
All right. We're coming up against, let's see if we can squeeze in a couple of listeners really quickly. Real quick, mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right. First up, we got Tony. Tony, one of our new members there. Tony, he says, as an aside, the network is really excellent. I love the Tuesday Q&A with Russell Rhodes. It was so good. And Russell is such a great speaker that I purchased his VIX Trader's Handbook on Amazon. Really great stuff. Thanks again. Well, thank you very much for joining up on the pro side there, you, Tony, and everyone else who's joined us over the course of just the past week out there. Love to see all. Glad to see you're enjoying. I'm sure Russell will be excited that you bought his book. That means he sold at least one. But we're glad you guys are getting a lot of value out of it. So you want to be like Tony and everybody else out there who's joined us on the pro side, head on over to there, theoptionsinsider.com/pro. Like I said, we got a really cool pro Q&A coming up tomorrow. So if you want to hear that, join us over there. It's really cool stuff. If you like being on demand, hey, we love you folks too out there. But if you like this extra dose of content in your life and you want to join us live throughout the week for all of our shows out there, then going pro is the way to go. Speaking of pros, we got another pro here. We got your favorite Mr. Rock Lobster, my boy Luigi. He says, if I didn't respect the Rock Lobster so much, I would have to claim to be a contrarian to the lobster investor, at least with VIX puts. Yes, it worked out you fading him last week, Mr. Luigi, because we saw that big vol spike on Friday. Of course, if you held on through today, you're looking a little better, but still, I agree with it. But he makes up for it. He shames you on one hand, Mr. Rock Lobster. He gives you umbrage, but on the next hand, he kind of gives it back to you. He says, I would like to ask the lobster what he uses for his info gathering. So much noise out there, have been down the investing news rabbit hole more than once. Is there a quick and dirty source he can recommend? So he slams you with one hand, and then he asks your advice with the other.
I think he just wants whatever news sources I have so he could fade them. I believe that is what he is requesting.
That could possibly be.
A license to fade, I believe. To be honest, at this point, I have no TV on at all during the day. I get all my information strictly from price and time and volatility and VIX curve. I don't look at anything anymore. The only thing I will look at is if, like basically when a stock gets to an interesting place, it goes onto my watch list and then I see if it becomes more interesting. I do have somebody now at Option Pit. We have two guys. One that was a fixed income trader at Bear Stearns for like 30 years. And another guy, Frank, so that's Griff. And then Frank is our kind of our Washington insider guy for like, they distill the news. So if you want, you can go to our website. They do blogs. They're really good and they're free. So I ask them for stuff, but at this point, I'm strictly just price and time and value. So like fundamental value, all that stuff. And I don't listen to any CNBC or any crap like that anymore. Just if the market's moving the ball enough, then I care. So that's it.
And that's it for us, unfortunately, too, out there. There we go. There's that music. So let's do a real quick abbreviated. See, I even like to squeeze you folks in here. That's how nice I am there, listeners. That's our abbreviated around the block, as well as where folks want to go to catch up with you. We'll start with Uncle Mike, sir. What are you keeping an eye on until Thursday's show? And if folks want more, maybe some more strategy block goodness, where should they go? What should they do?
4,200 on the SPX. Seeing if we can break that magnet to the upside. It seems like we've been really tight with that. And if you want to learn more about what I do, where you can go, follow me on Twitter at Mike TOSAW, TOSAW, and visit my website, stcharleswealth.com, if you're looking for a financial advisor who really likes the option product.
There you go, stcharleswealth.com, at Mike TOSAW on the Twitters, and Uncle Mike, and Mr. Rock Lobster. Where should folks go if they want to learn more about what you're doing? And maybe now that, maybe some of the vaccines are out there, they want to schedule an in-person with you at the GIOVINAZZI compound. Where should they go? What should they do?
Oh, my God. We charge too much for the in-person stuff.
Come all the way out to the hinterlands.
Well, I have done them, but mostly I don't like talking to. No, I do. I like doing live events with people because I get to talk to people and stuff like that. Go to optionpit.com, go to memberships, and check out all of our goodies. That's the easiest way to do it. Optionpit.com/events, and also just optionpit.com has our free blogs, which I think are some of the best, of course, most actionable blogs out there. I don't do the free blogs. I'm only you got to pay for me. But our guys that are writing content are great, and they generate good trade ideas every week, and people like them. So it is a fast-growing and popular part of Option Pit, if you can believe that.
There you go. Check it out for yourselves. Optionpit.com. On behalf of the Uncleist of Mikes and the Rockingest of Lobsters, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for listening live to this fun kickoff to the week. But you know what? The week's just getting started. We're not done, not by a long shot. If you're a pro member or you're a plus member, you're listening live, stay tuned. Hang out, have some fun. We'll pump some fun stuff in there. We'll be back in a little less than an hour with the Spikes father himself, Mr. Simon Ho. He's not just working on Spikes, but also a little bit of Bitcoin vol. We're going to break it all down with the new BitVol index. It's effectively the VIX of Bitcoin. A lot of cool stuff happening out there. We're going to get into all of that and a whole bunch more. Crypto has been selling off of late. Not sure if you've seen that. So we'll get into all that action, the volatility, the open interest, the skew, all that good stuff, and a whole bunch more in about exactly an hour. All our Pro and Plus folks can join us live for that. If you're listening after the fact, just hit next on your device of choice. It'll be there waiting for you. Then we're back again tomorrow with a good one, a really cool, a unique opportunity here to come in and pick the brain of the guy who runs all the options over there in execution for a lot of big funds, a lot of high net worth individuals over there at Northern Trust. So take advantage of this one. You don't get it every day. If you're not on the pro side, you got to be pro to do that one, but that's a cool one. Then back again on Wednesday with on-demand versions of both Boot Camp. That's pre-recorded going out on Wednesday. Don't blame me. Dan's traveling. And then, of course, we've got Brian going out there as well on Wednesday, Education Wednesday, and Thursday back again for episode 2 of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.